Let us today start with the fundamental analysis, which tells you whether the stock is attractively priced, or is it overvalued, or is it right value. We are seeing a number of companies, like for example take Facebook itself. We have seen that in the last 10 months, that means from January 1, 2022 till today, the stock price of Facebook is down 70%. But if you ask a question, sir, has the profits fallen so drastically? No. Profits only fell by 20%. So the stock price is not the true reflection of the working of the company. Always understand that. I told you stock market is in advance. It reacts things before it actually happens. Alright? So because the price has fallen down by 70%, is it the right time to buy, or is the price justified, or do we think that this price is very low with regard to the future uncertainty of the company? That analysis is only called as fundamental analysis. So fundamental analysis will tell you whether the stock price should be trading at 1 rupee or 100 rupee or 1000 rupee or 10,000 rupee. And apparently, we would buy such companies whose price is way below from our estimated right price. How do we buy in real estate? Any property that you would want to buy, how do you buy it? We first do research. Which area is developing? That is called a sector analysis in stock market. Which sectors has got a very bright outlook? So firstly, we look at an area, emerging area. Then within that, we will be looking at multiple properties and find out which property is available for chance. By looking at the other properties surrounding that area, we will get a rough estimation of the price. Say some 200 square yards plot is available for 30,000 rupees a square yard. Is it cheap or is it expensive? That we will only get to know when we are doing comparison with other plots in the same area or adjacent areas. So everywhere such kind of plots are available for say 35,000, 40,000, 45,000, 50,000. Only this looks to be in chance. Like that, stocks also have to be bought in chance as an opportunity. For some reason there may be disparity in the price. There could be a number of reasons. Maybe someone has bought the stock by taking loan, or maybe that they are compelled to sell it because of some institutional selling pressure, or maybe someone is selling it because he feels that the future is uncertain. There may be hundreds and thousands of reasons for a person to sell a stock. It happens in real estate also. No? You may wonder why this guy is selling for 30,000 when the market price itself is 40,000 per square yard. He may be in urgent need of money, or he may have thought of buying some other land which looks better than this, or maybe he is planning for retirement. We do not know, or maybe it is under litigation. This can also be an issue. Maybe the property is under litigation, or maybe there is some problem, vastu problem. We do not know. So that is our job, to find out what exactly is the issue. Firstly is we find out sector which has got a bright future. Example, say green energy, electric vehicle, this has got a very bright future. Within that we find out the stock which is undervalued. But to know which is undervalued, we have to compare that stock with the other stocks from the same business. Remember always, compare orange to an orange, apple to an apple. If I would want to buy an IT stock, I will not be comparing it with a bank. If I want to buy a banking stocks, I'll compare with the bank. I want to buy IT stocks, I'll compare with the other IT stocks. This is called as peer comparison. I want to buy a tire stock, I will be comparing with other tire based stocks. I want to buy CEAT, I'll compare with MRF. I want to buy MRF, I'll compare with Goodyear. So always do comparison of the like business. Hope this point is also clear. So keep a note of it. First point. Give the headline as fundamental analysis. So what exactly is fundamental analysis? That now here Apple, I do not mean the Apple mobile maker. It's a fruit. Apple has to be compared to an apple. Orange to orange. Example, you want to buy apple. Within apple there are thousand varieties, Kashmir apple, Shimla apple, American Washington apple, then pink lady apple. So you got to find out within this apple, in among the hybrid, which is the best one. Then only you can say that yeah, this variety of apple is the best. That doesn't mean that you are comparing this apple with pineapple. Alright, so within apple you feel that this particular hybrid variety tastes best. Like we do for mangoes. Why Alfonso mangoes are very expensive? Because of their taste. Not because they taste the best among all the fruits. They taste the best among the mangoes itself. Dragon fruit is very expensive. Kiwi is more expensive than even Alfonso mango. So compare orange to an orange, apple to an orange. Apple to an apple. So within a sector, whatever the stock that you have found out looks to be very much cheap, looks good to compelling buy because it seems to be undervalued, then you will be knowing it, how exactly it is undervalued or how much deeply it is undervalued by comparing this stock with other stocks. I had recommended in the group IIFL Finance long back, almost 1 year back. So the price that time was very cheap. The price that time was pretty cheap. I expect the price of IIFL Finance should be minimum 700 rupees versus 400 rupees currently. So there is a gap of 300 rupees which has to be filled. This is right price. Anything beyond 700 is okay, a sell price for us. But 700 rupees is the right price for this stock, which is still 70% growth is expected. So we will wait for that time. When that growth comes, then we will book out a profit here and then we'll choose some other stocks. So find out wherever there is valuation gap. But how do I know that it should be 700? When I compare this with Cholamandalam Finance, Shriram Transport Finance, Bajaj Finance, HDFC, I compare it with LIC Housing Finance, then I compare it with Piramal Finance. Like that, so many other finance companies are there. Poonawalla FinCorp, Magma FinCorp, then you have got Robeco Housing Finance. Like that, so many such companies are there. At least 40-50 companies are there in finance. Among that, this looks to be the best. You may say, sir, Bajaj Finance is better than this. Yeah, business is much bigger. Bajaj Finance business is much bigger than IIFL Finance. But I am talking about our investment return. Bajaj Finance price is rightly valued. IIFL Finance price is still very much undervalued. We don't want to invest in top company. We want to invest in undervalued company. This undervalued company may become top. Someone which is already on the top, how much more it will go? Someone is at the bottom only, they can go at the top. So that is why I love to buy mid caps and small caps. I don't love large caps at all. I believe large caps are trees, they have already grown, they cannot grow further, they are saturated. But a small plant, a herb, a shrub can grow very fast. So always invest in the emerging budding growth story. Right, now let us begin with the fundamental analysis. The first thing that we got to check for any stock is the market cap. And one more important point to keep in mind: only buy the stocks whose free float is very less. Remember the demand supply again. This point again, note it down, important point. The world has seen how much ever valuable, how much ever quickly note down, very very important point for you to understand the logic behind choosing a stock. So the logic of demand and supply should always be there. I'll give you some best examples. First one is the water, the necessity of life. Forget demand supply. Let us say everything is with the equal quantity, oxygen, water, and all that. Everything is of the same quantity. Then the price of water would have been the highest, isn't it? The price of oxygen, which are getting it for free, should have been highest, because without these two, we cannot survive. The price of food has to be the highest, without which we cannot survive. But what it is, they are all very cheap. Why it is cheap? Because of huge supply, huge production. We have lot of oxygen in our solar system, in our planet. We have got lot of water on our planet. 70% of our planet is covered with water. So because the abundance is there, the price is cheap. So not just buying a great company would do. Very very important point here. Just buying a company which looks undervalued is not going to do. The supply also of that company should be very less. That is called as free float. Free float means what? See, promoter may be having 50, 60, 70% shares. Some other big investors may be having 20%. Only 5-10% if it is left with the public, it means that the price is likely to shoot up. Why? Because we know that only 10% people make money in the market. So we would want to buy such stocks which are least with the public. That is why all my recommendations may look unique to you. You may have never heard about those companies at all. Those kind of companies only I recommend. Because those companies are not there with the public and the operator will play in such games only. It will be very easy for the operator to shoot up the price when the shares are leased with the public. So not just an undervalued company, we also want the company's free float market cap to be very less. I'll explain you what exactly free float market cap means. The world has seen that how much a necessary a commodity may be, the pricing is according to demand and supply, not according to the necessity. So oxygen, we are getting it for free, without which we cannot live. But you talk about diamonds, Kesar, Bitcoin, without this we can live. They are not at all required in our life. Some people they live their entire life without this. Yet they are very, very expensive. Why? Because production is very rare. Gold, silver, diamond, it is not easy to produce. They are least available. I don't know if you know this fact. Which is the most expensive material in the world? People say platinum, diamond and all that. What is most expensive? So you may not have heard it. It is antimatter. Antimatter is considered to be the most expensive element on this planet. If you ask me how much is the value of it, 1 gram of antimatter will be minimum 1 lakh crore rupees. Just 1 gram of antimatter is minimum 1 lakh crore rupees. Let us see exactly how much is the price. $2020, $62.5 trillion. Okay, imagine guys. I told you 1 lakh crore. This is 1 trillion is 1 lakh crore. It is $62 trillion, not even rupees, per gram. Unimaginable. $2,700 trillion per gram. No country has even 1 gram of it. No country in the world has got even 1 gram of it. That is why it is very expensive. Maybe the entire planet will have less than 1 kg. The entire planet has got this matter less than 1 kg. So not that without this we cannot live. Why? Because it is very rare, that's why the price is high. So we would only want to buy into stocks which are undervalued. At the same time, the public holding is least, otherwise the shares under circulation. Free float means the share under circulation. Note down this point. And if you ask me, sir, among these two, finding an undervalued company and then finding the company which has got least number of shares into the market, which one do you give priority? Maybe a surprise for you, but I give priority to this. End of the day, we want to make money. See, undervalued will give you margin of safety. Your capital will be protected to an extent. There will be buying pressure coming again and again from the bottom. But the real value, the real growth will get created only when the free float is less. An example is Bitcoin. So Bitcoin value is zero actually because there is no intrinsic value. It does not have any assets. But the supply is so less that it is very easy for the price to shoot up. Same rule applies to every asset class, not just this one, every asset class. The day when water becomes scarce, the price will rise. 20 rupees a bottle, what you are getting mineral water, you may get it for 30, 40, 50 also. if clean water shortage is present, but that's very rare because 70% of the planet is already water. But if at all it happens, getting water soft from the hard water, if the technology price increases, you'll have to be ready for paying a very huge price for the water. Why do you think in Gulf countries water is expensive than oil? Why? Because it's a desert area. They do not have water underground. They dig underground, they are only getting oil, oil, and oil. So, like how water is for us, how bore well is for us, for them it is oil mining. We are struggling to get oil, they are struggling to get water. That is why water is expensive than oil in that countries. Hope you understand the logic of demand and supply. This is very important for us to choose the right stocks. So, firstly, find out the stocks which are least under circulation. Now, just to give you a glimpse, how easy it would be for us to do fundamental analysis. I told you that how many companies are there? There are more than 7,000 companies listed. Is it practically possible to analyze every company and find out the best among all? Definitely not. Then what has to be done? I told you first condition is what? Companies whose free float is very less. That means companies whose daily volume should be very less. How can I get that? For this, you may have to go here. I'll get back to this point just to show you what are we going to do in classes to come. These are all screeners. Okay. Now look at this volume. Okay, this is a daily volume. So here the condition is that monthly volume should be less than 1 lakh. That means on an average daily volume less than 5,000. This figure you'll get to know later. These are all the stocks that come into the picture. How many? Only 20. So we do not have to analyze 7,000 stocks. We have to only analyze 20 stocks. This is how we are going to plan. So a smart person will always use screener. Don't think that even Warren Buffett or Rakesh Jhunjhunwala would have researched every stock. No, not possible. They first filter and then within that they choose their best stocks. This is how even you need to do it. So free float means the shares under circulation. If the number of shares are less in the market, it is easy for the price to rise. I've already given you an example of Bitcoin. Bitcoin price is higher because of the circulation capacity is very less. Next. Monopoly. This is also very important. Very important point, note it down. An example I would say is Eicher Motors. That is your Bullet, Royal Enfield. Only monopoly, right? Bullet means he's the only player. Though so many other brands have come in the last 3-5 years, but no one is able to match Royal Enfield. Then TTK Prestige in kitchenware. If I ask you what is a branded kitchenware, then it is all TTK Prestige. Symphony, coolers. Like that, find out the monopoly business. These three ingredients is important to create a multi-bagger stock. Undervalued, monopoly, free float. These three will sum up everything. So many ratios we will see. All these ratios will be pointing towards these 3 points. So what are the three combinations that we want for any stock? Undervalued, monopoly, and free float has to be less. This is a perfect recipe for the stock to multiply your money over time period. So let us quickly see the charts of Eicher Motors, TTK Prestige, Symphony Coolers, like say Domino's Pizza. These are all monopoly business in their segment. So they are not good to buy now. That growth story is already over. We should be buying the companies which are very small in monopoly business. Like I told you, TRIL, Trill. This is transformer rectifier company. It is monopoly in 700 kVA transformer. No other player in India. So what is the advantage they get? Already I told you, they get the pricing power. Again, perfect example I'll tell you of monopoly business. Dairy Milk chocolates. We do not have Dairy Milk as a listed company, otherwise it would have been an amazing return. So Dairy Milk is a monopoly business which you can talk to any kid, you can talk to any girl. Any girl that you would want to offer chocolate, they will only be satisfied with Dairy Milk because they do not get this kind of taste in other chocolates. We ourselves know it. Coca-Cola. The biggest wealth creator for Warren Buffett has been Coca-Cola. Soda water with a flavor costing 50 cents, he used to sell it for $5, yet there was a demand for it. That's how the company created huge wealth, and that's how even Warren Buffett also made huge money. 40 years he held Coca-Cola. He held on to stock for 40 years. Imagine the conviction and the patience that he had. Apple, company Apple, mobile maker, is a monopoly. So Android is on one side, other is iOS. Microsoft is a monopoly. Most of the American companies, big companies, are monopoly. Qualcomm, monopoly. So these companies will have always the pricing power. The price of Eicher Motors used to rule at 1 rupee, 2 rupee, 3 rupee 20 years back. Today the price is 3,745. That means almost 2,000 times return. 2,000 times return in 22 years means even if you had invested 1 lakh, that would have become 200 crore. That's an amazing return. That is how we want our wealth to grow. The price of TTK used to trade at 1, 2, 3 rupees. Look at here, 40, 50 paisa, 2003. That means 20 years, 2,000 times, 1 lakh would have become 200 crore. Amazing return. 2,000 times wealth. 1 rupee becomes 2,000. So this is how the wealth get created in the monopoly business. Symphony coolers. Okay, it's not showing beyond this. The price used to trade at penny stock 20, 30 paisa. Symphony coolers price was like 20, 30 paisa, I think, in BSE. Yeah, here. Can you see here? 90 paisa. Before that it used to trade at 20 paisa. Okay, see. 20 paisa was the price in 1997. We were like school kids that time. So 20 paisa becomes 850 rupees means how much? 4,000 times 1 lakh invested becomes 400 crore. This is the value creation. This is the power of monopoly business. Started as a small company in Ahmedabad by a trader who used to make his own coolers manually, not with machine, and used to sell it. But the breeze was amazing. Slowly kept on expanding. Today it is even manufacturing industrial coolers. Amazing business. We don't have any second brand name in coolers. As popular as Simple. There are Bajaj coolers and all that, but TTK Prestige with 50% market share and Symphony with 50% plus market share, they have the pricing power. If they raise the price, back of it, everybody will raise the price. That is how they are. So investing in monopoly business is very, very important, guys. Alright, so the first ratio that you will have to look at is the market cap. What exactly is the market cap? It is the total value of the shares outstanding with regard to current market price. Total value of all the shares. So what it means is, do not ever compare the company with the price. Price of MRF tires is some 60,000. Let's see. Firstly, Reliance share price is 2500. MRF share price is 90,000. Reliance is 2000, this is 90,000. Doesn't mean that MRF is so much big than Reliance. Alright? So, always understand that the size of the company is not derived from the share price but by the market cap. Market cap is only going to tell you the size of the company. That is all, nothing else. Market cap only tells you the size of the company. Whether are you investing in a very small company, which is micro company, or you are investing in a small company, or you are investing in a mid-sized company, or in a large, or in a blue chip. These are the categories we have. So never ever, if you want safety, then you can invest in blue chip, large cap. Otherwise, if you want to grow your wealth fast, do not invest in large cap and blue chip. Only invest in micro, small, and maximum mid cap. That's how I do. If your study is good, your analysis is good, then these companies will give you safety plus returns both. That's very important. So, note down. This gives us an idea of size of the company. Always understand this equation. Larger the size, safer is the investment. However, returns to are limited and vice versa. What's the formula for market cap? Share price into number of shares. So we may see that MRF tires price is very high, but the shares under circulation, the total number of shares in the market is very less. The price of Reliance Industries is 2000, but there are huge number of shares in the market. So if you want to know what is the number of shares for any company, always divide market cap over share price. Simple. Quickly note down. So can we quickly find out how many shares are there under circulation of Reliance Industries? So let us take an example of Reliance itself. I'm taking rough figures. So Reliance market cap is 16 lakh crore with share price at 2500. So the number of shares, total number of shares is equals to 16 lakh crore divided by 2500, which is equals to This many lakh crores. Okay, so nothing but 0.64 thousand crores. All right. So this is what a lakh crores. So in other words, 6.4 thousand crores, which is 6400 crore shares. So in market there are 6400 crore shares of the company. That is why the price may look very cheap compared to MRF tires. Let's see quickly for MRF tires. Where can you find this market cap? If you search in money control, you'll get it. They are providing even US based companies here. So what's the market cap here? 38,000 crore. So 38,000 crore divided by 90,000. Let's quickly do it. These many crores, nothing but lakh. 42 lakh shares are there in the market. Alright? Because 100 lakh is 1 crore. So 42 lakh shares only are there of MRF tires versus 6400 crore shares of Reliance. So obviously the price of Reliance looks much lesser than MRF tire. But which is of a bigger size? Reliance obviously. So market cap will only tell you the size of the company. It is not going to tell you whether the company price is low or it is high. Whether we have to invest in that company or we shouldn't invest. No, it will only tell you the size. And the general thumb rule of the market says that bigger the size of the company, lesser is the tendency of making negative returns or the price crashing or the company going bankrupt. But smaller the company, riskier is the investment, but at the same time, faster you can create wealth. Earlier, I had given you an example of a Titanic ship, a big ship, as well as speedboat. So, micro caps, small caps are all like speedboats, and the other big stocks are like cruise. Now, cruises every day you'll see that thousands of crews go on voyage, but only once it happens that a ship like Titanic gets sunk. So it doesn't mean that large cap companies do not crash. We have already seen an example of Nokia, Kodak, and all that, General Motors. But in small cap, every day some of the other companies going bankrupt. So in large cap companies, there will be government support. Every country has to support. They try their best at least. But they see that there is no chance, no ray of hope for supporting it, only then the company will go bankrupt. Example, Yes Bank. It did not go bankrupt because government came to support it. Because if it goes bankrupt, India will lose its face value among other countries. So government has got no other option but to save it. This is how it happens. Alright. So four classification of the company according to market cap, we'll first note that. Note it down. We would love to invest in these category companies. IFL Finance is 7,000 crore company. What I'm recommending presently. Alright, so once the market cap is done, the next important ratio without which analysis is imperfect is PE ratio, price per earning multiple. So lesser the value, better is the investment opportunity. So what is the formula for P by E? Write it down fast. Alright. So P ratio, price per earning multiple, very important, without which nobody can complete their fundamental analysis. Everybody has to look at it. How much ever big or small investor he may be, without doing the P ratio analysis, they cannot make out whether company is cheap or expensive. So what is PE ratio? Let us break up all these things into a small business. Let's say that I run a training institute. My investment into this business is 10 lakh. My investment in, let's say my investment in this business is 1 crore. 1 crore is what I invested for a training institute. Out of that, my net profit is 20 lakh per annum. My net profit is 20 lakh per annum. So what is the PE ratio? 1 crore divided by 20 lakh, that is 5. So my PE ratio is 5. So that is how PE ratio is defined. Whether it should be low or it should be high. Let us say not 20 lakh, I am making 25 lakh per annum. Then what is my PE ratio now? 4. So how much low the PE ratio is, that much better the company is. So let us take an example of the PE ratio of IIFL Finance. So firstly, we have to know what is the market cap. Let us go back to money control and see. So market cap, what we find is 16,000 crores. So it's not 7,000. When I recommended it was 7,000. Now it is already 16,000. So it's a mid cap. Market cap is 16,000 crore and net profit, that is annual net profit. 12 months net profit. If you want, you can scroll down and see. So net profit, this is for every year. This is one. Look at the growth first. Amazing growth. We anticipated somewhere here itself that the company will grow like anything. And it is right now 1188. So let me take a calculator. 16,000 divided by 1188. That is just 13.5. I'm taking round figures. So P ratio is equals to 16,000 divided by 1138. This equals to 13.5. Now comes a question, which P ratio is good?
1188, I guess.
1188, okay. Now which P ratio is good? There's nothing like P ratio 1 is good or 5 is good or 20 is good or 100 is good. Always PE ratio must be compared with the growth. If the growth of the company is more than this, then the company is cheaply valued. But if the growth of the company is less than this, then the company is expensively valued. This new ratio is called as PEG ratio, P by E by G. So P ratio as a standalone doesn't give us any signal, doesn't make any sense to us. What we need to see is P by E by G. But to know P by E by G, we have to know what is P by E. That's why we have covered it up. Now write down, this ratio is very important, especially for finance based companies. Note it down. Alright, so P by E by G is nothing but PE ratio divided by growth. So P by E ratio can be only justified by the internal growth of the company in the last 3 years minimum. But understand, very important here is this word, normal economic condition. An example I'll tell you. Transformer and rectifier, I told you in the bracket, is good only for 1 to 2 years holding. Why? Because there is some crisis going on in Ukraine. That crisis advantage is going to get for a year or two. So if you see after 2 years, the P by E by G ratio, because of an amazing growth, because of some crisis, may look good. But that growth may not repeat in future. So this growth, what you are checking here, should be projected for further years also. In other words, whatever the growth that you are seeing for the last 3 years, it should not be one off. It should be a regular growth. So IIFL Finance, there is nothing such special thing happened that it grew only for these 3 years. It's an indigenous growth. It's a normal growth. It's an organic growth. So it is likely to continue like that because the economic conditions are normal. There was no change in the policy by the government. There was no management change. Nothing happened in the company. It is running on autopilot. So all the finance companies, how they are growing, like that only even IIFL Finance is growing, but percentage terms it is growing better. So let's have a look at the growth of IIFL Finance. From 5,503 crore, it has increased to 760 crore. So how much is the percentage of growth we can see? 760 minus how much? 503. So 257. What I have to do? Divide by the base 503. This will give me the growth rate. How much? 51%. So the company has grown by 51% between 2020 to 21 post COVID. But this was a normal year. There was no COVID or anything like that. No lockdown or anything. So 760 crore becomes 1188 crore. So what I do again? 1188 minus 760. 428 divided by 760. That is base. How much it is? 56%. So we can say roughly that the company is growing. Roughly 50%. So ideally, the P by, so the P by E by G ratio is how much? What is P ratio? 13.4 divided by 50. It is approximately 0.25, which indicates company is trading at 75% discount. Also means the right price should be 4x as of today. Means it should have been trading at 1600 rupees. This is called as fundamental analysis. It's not just then, there are other things also. You want to buy a mobile, just if the camera is good, you will not buy. You look at other things also. But this is very important thing to note. Company is growing by 50%, but P ratio is only 13.4. If the P by PEG ratio, sorry, if the PEG ratio is 1, it means that that's the right price. So if the share price of IIFL Finance was 1600 rupees, then PEG ratio would have been 1. And you are buying this company at 400 rupees only. That means you are buying this company at a deep discount. As the price rises, when this P by E by G ratio comes to at least 0.5, then you can think about exiting. We won't wait till 1. Till the PEG ratio becomes double, we exit. Under 1. If it reaches 1, we exit before only. Under 1, if it becomes 0.5, if it doubles up, we exit there. Like that only we compound our money. So this company is very cheaply valued. That's the reason why. Imagine when it was 116 rupees. That time it was further cheap. First time I recommended was at 116 rupees. Then I myself bought at 116, then 250. I bought recently at 340. There's still a long way for this company to grow. Not because I'm associated with IIFL, because the company's working is good. That is all guys for today. So we have already covered 2 most important ratios of fundamental analysis. There are 3 more ratios that we'll be covering up tomorrow. A small homework to you. We have checked the PEG ratio for IIFL Finance. I want you to check it for other finance companies. Because only then we will get to know whether IIFL Finance is cheap or Bajaj Finance is cheap or Shriram Transport Finance is cheap or HDFC is cheap. Then only we can make out, right? If they are trading at, let's say, 0.2, then that would be better than this, isn't it? So that's the homework for you. Let's see who can get the work done. Any doubts, questions, make use of the chat window, make use of the audio control.